What's going on, believers? It's your boy Rebalance back with another weekly review and outlook. As always, it's not financial advice. This is just education and entertainment based on my time and experience in these markets. So please make sure you do your own research. I like to start with the economic calendar up, kind of like the TV guide of the market. Just looking at last week, Wednesday was the first day with any interest. We had CPI, followed by PPI and unemployment claims on Thursday. I'll just click into those. So if you want to be able to read that really quick, but the website is forexfactory.com that I use. So you have to pause it if you want to like actually read this stuff, but just to give you a glimpse in case you're lazy and don't want to go to the website yourself. So you kind of look into that, all right, through the video here. And now Friday, well, we did have more news after that. So FOMC member bond auction, and then we had some more inflation-related news come out on Friday. All right, so again, just kind of click into that. It's gonna be a shorter video, so I'll allow the time for this. But this upcoming week, so Monday, got this 7:30 Central Time. I'm now using Central Time, so 7:30 a.m. Central Time, Monday morning. Tuesday, we have 7:30 a.m. as well. News coming out on the dollar. Wednesday, nothing on the dollar. Thursday, unemployment. And then existing home sales at 9. And then Friday, we got Fed Chair Powell speaking. So every day but Wednesday should be a very volatile week, in my opinion. We're getting a lot of volatility, just not a whole lot of movement on the higher time frames. Getting into the charts, though, I'm actually not going to explain from this perspective this time, but I will put up the charts and just scroll through them really quick so that those who've kind of caught on with some of the concepts and tools that I like using the most, you'll be able to at least see the levels that I was using and watching from last week and that I think are still of some importance moving into this upcoming week. But the market has already opened, and so I'll just do this right one time for the one time. So opening price for the new week, and I just slide Sunday over there. All right. And so bow. And that's probably all I'll do. So you just see me push this over to where the new week starts at. And then you kind of just be able to pause it if you need to kind of check your own charts and look for the same levels so that you can understand through your own due diligence why these levels were important and why I've marked them up and have now considered them important for this upcoming week still. The Russell is a new one that I've recently added to my watch list, but I do feel like it may serve a purpose, and it's not that much work to simply just have one more chart that I'm marking up, so I don't mind it. All right, and so there's that. Now what I'm going to do is wisely look at from the perspective of the new chart that I'll be using for my intraday trading. See how I got, myself, my self promo, if you will. And you won't see the asset name up here in the top left. All you'll see is open, high, low, and close prices for the candle that I'm hovering over. You got to look down here for the asset and the time frame. And then above that is the current, well, Actually, above that is not the current date because the 19th of May has not happened yet. But let me see if I go down to the daily. Okay, so it's basically since it's on a weekly time frame, I'm assuming it just got us on Friday already, which is the 19th. And so that's why this is reading May 19th because this candle will close May 19th. So I'm learning something new about this self promo that I got going up here. I didn't know that that was how it reacted, but there you go. So whenever you do see in the future on my videos, if I'm on the weekly chart, just know that the date of the weekly chart that is showing is the date that that weekly candle closes, right? But as far as analyzing the charts, right? So last week I actually took the leap of faith and officially for the first time actually called a direction for the dollar and indices. And my direction for the dollar was down, which as you can see, this was an up close candle, so wrong. And then my direction for the indices was up. S&P closed down, so wrong. NASDAQ closed up, so technically right. 30 closed, well, Dow Jones closed down, so wrong. And the beauty of this is that when I go down to the smaller time frames, I want to set individuals at ease who may feel fearful of even taking the chance to try to learn something as risky as trading because of the fact that it's not so much about having to be perfect and having to always be right. The rule number one is preservation of capital. And so as long as there's logical money management being applied, there's really nothing to be afraid of once you know what the hell you're doing. But so there's that weekly chart again. Now, I remember in a few videos prior, it was this inside bar that I was monitoring how we took out the low and I was expecting the high to get taken out. So it took out the high, but then it left more so it had equal highs it took out and it left equal lows. And I was anticipating it reaching for those equal lows before running higher. But there's a lot of news, right? As we just looked at from last week, a lot of things to do with inflation. And so it did not actually run for those equal lows on the daily. It it refused to go down below them. And then it rallied one more time above the buy side. So as far as the weekly is concerned, this is where my eyes are for the dollar. So first and foremost, there's this inefficiency here in between these candles wicks. So from a weekly perspective, right, I can see price wanted to navigate up there simply because it's an inefficiency in price, right? So if price is moving higher, it's going to be seeking inefficiencies where there wasn't much opportunity for buyers, as well as buy side liquidity above old highs. So then I also have above this weekly high, right? There's going to be buy side liquidity resting up there that we have not yet traded into. So 102.807, right? As far as looking at this from the weekly. From the daily, you'll see here that I have the April high to low range marked with this rectangle, and I've dragged it across. And so what you can see is that, so this was May 1st, this candle here. So as you can see that since May started, it's been inside the high-low range of April. So just consolidating and at this point seeming to be reaching up for buy side. At least this is that weekly buy side, right? At least above this swing high here from the daily. And then, of course, the April high is going to be the high of the rectangle. So if it gets above that, then I would be anticipating, right, reaching for April's high. Right above April's high, we have this weekly inefficiency here, where the low of it is 103.229. Right. So as far as upside, if it's going to continue, another thing as well that I'm taking note of is how we have this down close candle here that expanded away from, and it also left this area of inefficiency between this candle's high and this candle's low. All right, so I'm also taking note of that as far as if price does have any willingness to go lower on a daily perspective, this is going to be that first area of interest for me to see how it responds. If I can get some sort of a bounce, which would allow me to easily short the index futures if they're running for sell side, or if it wants to break through this and invert it and possibly use it as resistance to then go and take out the liquidity resting below the equal lows on a daily. So last thing I'll do is just go down to the hourly. And so what you'll see here is the layout that I'll be using now. I have it built in where I can see the daily candle, like what this is right outside of the candles, those are representing the daily candle. So from the time that the market reopens at 6 p.m. to the time that it closes, right, at 5 p.m. So I have those times represented with the daily candle kind of in the background of the price action on the lower time frames, so that I don't have to have that second time frame loaded up to the right. Now I'm kind of seeing everything all at once, which to me, now that I know more what I'm looking for, is beneficial, because eventually I also want to not have to use any real sort of like markups or drawings on my chart so it can be completely clean. But first I need to train my eyes to see what it is I'm supposed to see so I can effectively use them to take trades that make sense, right? But so just looking at it from the hourly, this was where last week opened up. And so as you can see, right, we're traded lower, but ultimately we were able to rally towards the end of Monday. And so the black or gray daily candles are again my up close candles, and then the green ones are going to be the down close. So you can see that it was a day that started trading lower, but by the time the day closed, it was higher. And so on the daily candle, it closed up. And this candle never really got any body closes, right? This was the opening price when it reopened that evening to start Tuesday's trading. It ultimately just consolidated, right, on that opening price with that gap, and then continue rallying, taking out highs. And then from there, ultimately a consolidation, where we get to those CPI numbers, we have this drop. And then from that drop, right, we had a retracement, look like we're about to continue lower. And then that London session, Thursday, we rally higher. We ultimately kind of consolidate going into the release of the PPI and the unemployment claims. And then we get another push higher, another consolidation, right? One more push higher. Got a nice little inefficiency here that we trade into on this candle and on this candle with the news that happened on Friday. And then one more push higher to end the week. And so that's why, as far as the outlook that I had for last week being incorrect, day to day, I also had to qualify whether price was showing willingness to respect my bias, right, to perform as I anticipated it to. And so once price had broken back above this high, which was at this point, right, we had a bunch of equal highs on the hourly. Once it broke back above this high, which was the CPI high here, before we even had the PPI release, it was ultimately a cancellation of that bearish bias on the dollar. And as you can see, it was rather aggressive, continuing higher for the rest of the week. And also just going back to the weekly so that we can see another asset, and we'll just look at S&P. Like I said, I want to keep this short and simple. I'll do the breakdown S&P, but then I'll show you one more thing, and then we'll end this video. But so weekly on S&P, again, it closed down but what do we have? An inside week, so it traded within the range of the week prior. So I'm looking at the high and the low of this week. Both is basically failure swings because neither one was able to break the high or low of the previous week. And so I'll mark those levels up. Now go down to the daily. And then as you can see, same concept that I showed on a dollar. The shaded rectangle here is representing the high to low range of April. And so May's first candle was actually here. So the first day of May, we actually traded above April's high. And then quickly we ran and we took out April's low. So we basically currently on a monthly chart, we have an outside month, whereas we took out the high and the low of the previous month, and we still have a solid about like 16 days. So technically about another 12 trading days or so that we have before the month is of May ends. But so this is essentially that high to low range, right, of last week. So I'm going to be watching those same levels, but now as you can see, I set it to where I can see it on the daily chart too. Now, as far as this is concerned, two areas that were holding price within this range. So we had this inefficiency here between that low and this high, which you can see we traded into Wednesday and Thursday with the news releases, but we're not able to get any sort of body closes in there or like break through it. And then the other area is this inefficiency here in between this candle's high and this candle's low that we pretty much sat within, right? And that we're currently in right now as this week has begun trading already. So those were two levels that were pretty much justifying the sideways movement in the E-mini S&P. And those levels, obviously, I'll be watching this week to see is there any willingness to get a body close below that and possibly reach back again for a new low for the month, or will it be able to find some sort of support and run back up to this inefficiency, taking out some of the buy side above some of the days from last week that traded. But hourly, so again, now you see I've set it so I can see all of those levels I just marked from the weekly and the daily. I can see it on the hourly. And so basically looking at last week, which started here, consolidation for the most part, very volatile once we got into CPI, right? Once that CPI hit the market, we had a very volatile market, but ultimately just in a large range. And then, like I said, the last thing I want to show is how this is same thing, right? This shaded rectangle is the April high to low range. So May 1st, NASDAQ, we took that out, we retraced. We have this inefficiency. Now we filled. We rallied back above that high once, twice. Then we made a new high, another new high, another new high, retraced. And now we have this new week, the first day of it, right, opening up on top of the April high. So NASDAQ wasn't able to meet all of my personal objectives. Again, I went through those charts, right? I scrolled through them to just let you see those levels and whatnot. Just going through the older videos that I've already released on a weekly basis, you'll be able to see particularly the levels I'm talking about were called last week and shown where they were from and things like that. So I don't want to encourage laziness. I'm not here to really hold anybody's hand. This is for sure just a way for me to journal my growth and just have a track record, but also there is for sure opportunity for value to be added to, people that are interested and that are watching with the intent to at least learn something. But so there's that. And as far as NASDAQ in particular, right, still not showing any real signs of willingness to break lower. So again, I'm still bullish. That hasn't changed. Of course, that just depends on if the dollar shows weakness. The dollar isn't showing any weakness right now. And so if it doesn't show weakness, and again, it breaks levels and such that I mentioned that would allow for easy sells on indices running for sell side. It did create a lot of sell side so far on its way up. We have this trend line, which I don't really believe in trend lines, as you can even see. The title I have for it is a liquidity line down there, but I couldn't use both of these, to be honest, and just extend right line, right? And then make another one and just go from the same level, but to there, extend right line. So watching these two levels, and again, I don't really trade using trend lines. I'm more of a person that looking at them as like there's liquidity resting below here. So if it shows any signs of it breaking down and wanting to run for a sell side, below all of these lows, sell side exists because people that are trading this using these trend lines are moving their stop losses up to lows that are, quote unquote, respecting this trend line. So that was some free game for you. Then looking at Dow Jones, right? Same thing, shaded rectangle as the April high to low range. So May 1st, we traded above the high, quickly run for the low, retrace, and then all last week, pretty much a lot of indecision as far as like just a lot of volatility, no clear direction. So that's why the day that we had CPI, right? Very small body, large wick, large tail. And the day that PPI unemployment came out, we have a good size wick above. This is a good size candle body for sure as far as the volume. And then this large tail that right closed back into that April high to low range. And then we have Friday close outside of it again, just as this candle did. We trade below the bodies here. There's liquidity resting below that. And then as you can see so far this week where we open up at, we're currently lower than the opening price. And so this low for sure has the potential to become a swing low. But for sure there's liquidity resting below that. So that would be a area of interest for me if price was to trade below that. To be honest, I don't really have a bias though for this week. I can't really, just because I'm like convicted to my overall long-term analysis, weaker dollar and stronger indices until they've reached a certain level of buy side, clear that out, and I can see signs of a reversal. I'm not seeing that sign just yet, right? And so although we had Dow Jones trade above these equal highs here on the daily, break lower, take this, right? So the main area that I'm really watching for like Dow Jones in particular, as far as the daily chart showing signs of a rejection and us continuing lower, is going to be this inefficiency up here, because this inefficiency was a boost to running out this low. So as price retraced, failed to get there, and now is running lower, this could just be a consolidation and accumulation of sorts. And I wouldn't mind seeing, since it's all the way down here, if it pushes back up there, that's about 700 points. And especially if it takes out this low first, we're talking about 800 plus points coming into this range, and then wanting to, trade lower. That would for sure allow enough time for everything else to kind of get in line with what I'm looking at. And I do believe also, right, for the Russell 2000, same thing, the April high to low range, 2nd of May, we took out the low, right? I think traded just below it here, open and close outside of it here, but then quickly back inside the range. See how we traded it within that range all last week, and we're still currently within that range to start this week. And then gold, the same thing, shaded box is going to be the April high to low range. On the 4th, we took out the high, traded back in the range. We're still currently in that range. So very difficult still to have any sort of long-term perspective on the markets, because each little bit of news that comes out, although I do believe there's smoke and mirrors, they're also shifting sentiment left and right. All of the speculation about what it means for a report to be quote unquote good or bad, Those things are all subjective. So I try to look at it from just a perspective of liquidity. Where's the liquidity at? My goal is to take a trade that makes sense as far as I understand where I think it's going, why I think it's going there, and when I think it should go there. If I have all those things understood before I press the button, I should be in pretty good shape. But I'm gonna end the video on that note. Shout out to all the believers. Thanks for tuning in. Like, comment, subscribe. I'll see y'all in the next one. Peace.